Top most important finance trends. The term financial industry include not only banks but also investment firms or fintech businesses. This entails a wide variety of company formats, goods and services, and consumer engagement strategies. Modern technologies are necessary for brands to differentiate themselves from the competition. Which of these would you believe to be the main developments currently affecting the financial services industry? 1. Customer communication bots. Nowadays, it is becoming increasingly common to communicate with customers through contemporary means. Artificial intelligence-based voice bots, chatbots, both basic and advanced, virtual assistants, and live conversations are some of the solutions deployed. All of these solutions are intended to increase customer support availability by alleviating the burden on contact centers and by offering qualified assistance around the clock. A business can create its own chatbot or integrate one of the services on the market with its website, from providers such as TARS, Haptic, or Growthbotics. Bots and live chatbots can assist a business cut costs associated with providing customer care in addition to providing convenience to clients and enhancing their overall experience. Robots can now execute part of the work that was formerly done by real personnel of financial services organizations thanks to automation. Robots, including voice-activated ones, are capable of selling, customer authentication, surveying users, and answering their inquiries. These options won't entirely replace speaking with a live corporate representative, but they will significantly lighten your team's workload. 2. Exchange of data between service providers. The PSD2 directive governs the necessity for information exchange with other banks. Financial services known as open banking rely on banks giving information about their customers' accounts to third parties, TPP. This is a brand new development in banking that is directly related to recent legislation. Customers of different banks frequently use a variety of programs. Using a bank's application, open banking enables users to manage these products and monitor multiple bank accounts, loans, including mortgages, and credit cards in one location, e.g., order transfers from all accounts. By implementing the services of this group, businesses can enhance customer satisfaction, foster more customer loyalty, and facilitate the use of their products by consumers. 3. New methods of mobile payment. The most alternatives for transferring money and paying for certain services are what customers desire. Companies are increasingly deciding to incorporate the e-wallet payment option into their software as it grows in popularity. The recipient of this kind of application will receive the funds right away if the user simply tops off their account and makes a payment. As a result, businesses developing fintech solutions must ensure that their applications and e-wallets can communicate with one another and must also create their own tools for this purpose. There are also more recent mobile payment apps emerging that function similarly to e-wallets, such Google Pay and Apple Pay. Such solutions are being developed by fintech companies, who are giving them a variety of features to aid users in managing their finances more effectively. BLIK is a kind of fast payment that is accessible and well-liked in Poland, but it is quite likely to be adopted internationally shortly. There is no need to log in to the bank's website. With just one click on the mobile application, the consumer can generate their one-time payment code. The seller's account is immediately credited with the money. You can do this to pay for purchases made at markets and stationery stores as well as to rapidly transfer money to others, directly to their accounts or in cash, which can be withdrawn from an ATM with the use of a code. 4. Asset tokenization. Asset tokenization aims to make peer-to-peer transactions possible without the use of middlemen. Tokenization is the process of leveraging blockchain technology to turn physical and intangible assets into digital tokens. This approach can be used to a variety of assets. The most popular ones are company shares, bonds, real estate, precious metals, and pieces of art. Blockchain in general and tokenization in particular have both hazards and opportunities. Companies opt to do this for a variety of reasons. Assets can be divided into several shares after being tokenized, making them accessible to investors with low starting capital. This makes it possible for those with little financial resources to invest in securities and generate the money they need to expand their businesses more rapidly. Assets can be more easily traded when they are tokenized, and it removes geographical restrictions by allowing an investment to be made available to an unlimited number of potential investors. By registering on the site that serves this purpose, tokens can be readily purchased from anywhere in the world. 5. Analytics based on artificial intelligence. In the corporate environment, a variety of analytical approaches are employed. Analytics are applied in a variety of ways in the financial and banking industries. The usage of cybersecurity systems is one of the most significant uses. Artificial intelligence and machine learning-based systems can spot patterns and detect departures from them, unusual behavior of system users or suspicious transactions. This kind of software is capable of identifying financial fraud, system security breaches, and phishing attempts. In-depth reports can be produced using big data, immense quantities of structured, unstructured, and semi-structured data, which cannot be interpreted by less sophisticated instruments. Big data analysis using artificial intelligence systems makes this possible. By doing this, you may produce visually appealing reports for your clients and obtain insightful advice that can improve an organization's productivity and lower costs. 6. Personalization of customer experience. Personalization of content based on past and present data enhances user experience. They feel more understood by the company when the messages exhibited are catered to their wants and expectations, which strengthens the link and loyalty. It also enables marketing activities to have a greater impact. The only component that can be customized to meet users' expectations of financial services products is content, though. The possibility of a sale is increased by more accurate offer recommendations thanks to behavioral analysis, study of user behavior and preferences. Another significant benefit of this type of advertising is that it lessens the possibility of disappointing potential customers by presenting ideas that fall short of their expectations. Implementing a program that generates financial advice for consumers based on their account history is another illustration of personalization: expenses, receipts, internal transactions. After checking in to the bank website, a customer may be able to view investment or cost management advice. These actions lessen customer churn, boost their loyalty to a particular business, and better encourage them to make a purchase. 7. Automation. Automation refers to the use of robots and technology to replace some manual or repetitive tasks. This process allows real staff to concentrate on jobs that call for imagination and human intellect. The reduction of errors is an additional benefit. Although automation is currently utilized extensively in marketing across many industries, via mailing systems, social media, and other communication channels, there are still a large range of alternative uses for the technology. It is possible to automate the document verification procedure. The acceptance of loan applications or requests for payment of compensation would be greatly sped up in this way. For improved budget management and automated payment planning, modern technologies can also be used. Please like, comment, share and subscribe to my channel. Thanks for watching.